Here today with Paul Kuhn, better known as Redbeard Financial. He's a financial advisor. He's here to tell you can trust him. I trust him. I trust him with my money. I trust him with my kids. And he's trusted me to be here today, so he wants me to read this statement. Paul Kuhn is a financial professional with Redbeard Financial, offering securities through Avantax Investment Services, member FINRA and SIPC. Any comments made by Paul are not to be considered personal investment advice. Please consult with your financial advisor, Paul Kuhn, CPA, or attorney as appropriate.
Yep, Paul Kuhn with Redbeard Financial. Working hard every day to become everybody's favorite financial advisor.
So do you go by Redbeard or do you go by Paul?
I'm just Paul. That's just a catchy name for a DBA, so people don't forget about it. Because, Paul Kuhn Wealth Management, it's just another average white guy's business, and it's not memorable, But I don't have the beard anymore, so.
I love Redbeard, though. I love that term.
It was fun. Yeah, and everybody, they look at it sideways like, that's cool. And I had the same, when I thought of it, I was like, man, I don't know if I want to do this. It's kind of goofy for a serious business, but it's had a warm reception. So, well, I'm stuck with it because I own it. So,
Yeah, it's unique. It's who you are, without a doubt. And so kind of being out there, put yourself out there. And
I think it is. And I think, because I'm not the most serious guy in the world. I mean, I am with my business, of course, but I don't want to be confused with the guy working in the back office at the bank. That's not me. I'm doing different things. So
you're at the front. You're the face.
That's true.
Yeah. And so let's talk a little bit about your business, because you're a financial advisor and you help people make decisions as to what to do with their money.
For sure. Yeah, it's not rocket science, but it's like, like you had said earlier, this is what I do all day long. So there's a much better chance that I'm going to get it right than you, because you got other things to do. So you might make a mistake that 20 years down the line cost you 6 figures.
Now that's that's hard to hear, right? Because I've got my money, I've worked hard for it, and now you're telling me, okay, give it to me because I'm going to do better with the money than you can, because you're going to mess it up.
Maybe, and not necessarily. And there's a chance. And I tell people this too. Hey, if you're really on top of this, you have access to the same information I do. You can research it. My licenses just say that I'm gonna do it, that I'm gonna make sure I do the research before I make recommendations. But you absolutely can, and I definitely have turned clients away when I feel like I don't know if I can bring value to your situation. But in many cases, if you miss a tax loophole 1 year, you go to retire and you're like, man, I could have had 1.7 million instead of 1.2 million, and then that's like, ooh, that hurts. And it seems like a small mistake at the time, but because I've got a process for everyone, I'm much less likely to miss the things that will add up to a few percentage points that compounds over the years. So.
And we're talking about investing the money, putting it somewhere aside, something that's going to be in the future. But what about growing money now, right? Like if I have money not necessarily putting away for retirement, but money that I'm going to need access to in the next 6 months, next year, next couple of years down the road. My initial gut, having control over it, saying, hey, I want to be active in it. I want to make sure that the money is where it needs to be and to watch everything. But then in reality, I get so tied up with the day-to-day of the business.
Yeah.
I just can't do it, right?
And, as long as I understand your goals, that there isn't really much separation between you and your money. It's just kind of like I'm the guy who pushed the button because I knew what you wanted. So as long as I have a good communication with you, then it's not. I mean, there really isn't much different than you're just delegating a task, and so you don't really lose control necessarily. I just may think of something that you didn't think of and be able to point it out, and maybe I didn't help at all. But maybe I do, and that's kind of where it's just nice to have, another person working on your behalf.
Yeah, and can we stick on this and talk about that kind of aspect, not necessarily putting away for retirement, but taking money that you're going to need access to within the next couple of years, right? How do you manage those type of funds, and what are you looking at?
It's going to get tougher. The last couple of years we had high interest rates, so we could use CDs, we could use money markets and make 4 or 5% with no risk. I mean, bank guarantees. That stuff's going away. Rates are going down. We're not going to have that. And it was nice, right? It was tough if you wanted to buy a house or something, but if you had short-term needs like that, it was great. We have some alternate, option strategies and things that we can use that are pretty secure. They're just not quite as secure, and so that's a tough market, and it's sometimes it's a place where, hey, here's the risk. This might not be something you want to do. You might be better off at the bank. I can show you some options, but we're going to have to use a little bit of risk in the near future for short-term goals, and that kind of defeats the purpose. So it's a very tricky area. So.
But the bank is like almost never an option because the money's going to sit there. They'll maybe entice you with 2 or 3% money market rate for the first introductory period, but then after that the money's just sitting there and you're getting almost no interest whatsoever.
And there's some online bank options where you'll get better money market rates and of course CDs, but you should be able to get 3 to 4% at least for the next year or so, we would hope. Can't be sure about that, depends what the Fed does. But yeah, it's a tough thing. You just have to kind of take advantage of it on the other side. If we don't have great options for short-term growth, but maybe you have great options for short-term lending in that case, and so where you can use leverage, to your benefit by borrowing. There's always something you can do, regardless of the rates, I guess is what I'm saying. If you got high rates, yeah, we want to do short-term saving and make money with those. If we got low rates, well, then we want to leverage and use use bank lending to grow the business, or whatever you might want to do. But
how does that work, right? So a business that's flushed with cash, and if rates are going to continue to decline, right? Are you saying, hey, don't use your cash, let's do lending, and then what do you do with the cash in that situation?
Well, I wouldn't necessarily. I'd have to see a more specific situation before I make any recommendations on that. But theoretically, you could be more aggressive with your cash. Put it into an investment vehicle with a longer time horizon. Because obviously, with the longer time horizon, we can afford to take more risk because we're gonna find a rebound. If we have more time. So if you don't need that cash, you can invest it in something. That's gonna be tied up for a little bit longer, which is going to get you better returns. And then use leverage for your other expenses, and that's it's arbitrage, right? Using low interest money for your expenses and making more with your investments, but it's a delicate situation, right? Because now if we are putting risk on your cash, and then the rates go up, you could catch yourself in a pinch. So it's something that you would want to be very specific about. What you allocated to which buckets, so that you don't get yourself in trouble, and like, hey, this money's tied up and these rates went up. We need money, and then you get hurt. So,
yeah. So to avoid that, having the cash more accessible, if you're looking for a short-term investment 2 years out, you're meeting with the client trying to determine what the risk is going to be associated with, what their risk level is, right? How much of this cash are you willing to lose, and then adjusting. Right, diversifying the funds in such a way.
And probably not lose, but like, hey, can we have an extra couple months to work with it? I would say in most cases it's going to be, we can find a secure option where there's some downside protection if we have time. And if we don't have time, then we're really limited. Then it's just all we can work with is rates. So
talking about that time, right? You're trying to balance out the investment. Like your investment's going to go up and down, and so you want to be able to have the investment for a period of time, so that you eventually are going to see that gain. But what about a lot of people that are saying, hey, like the sky is falling, like the dollar is going to continue to drop, it's going to drop dramatically in the years that come, because the United States, it doesn't matter who you're going to vote for, Trump or Harris, they're both going to spend money,
right? Much
more money that's going to come in. We're going to continue to see inflation. And so they're basically saying, hey, those long-term rises in drops, you're not going to see the value of your dollar in the future, regardless of how much your investment raises, because we're going to have such high inflation.
And there could be some truth to that. Typically, we find solutions to the naysayers. That there's been people saying that. I've been in business 12 years, and I don't know that there's been a year where I haven't had some clients come to me and say, I heard everything's going to crash. I saw this thing on Instagram that everything's going to crash, and it's,
Instagram was the...
Or Facebook,
right.
But it's very compelling. Yeah. It's very scary, because this could really hurt these people. And you do have some people who pulled out and went to gold, and heck, this year that was great for them, But there was years where they pulled out and went to gold, and it was just dead, and they should have stayed in the stock market. So that's where diversification is important, because we don't know which of these predictions is going to be true. So we make sure that we have coverage in all the areas, exposure to gold, exposure to equities, exposure to bonds, and of course, if we can use interest rates, safe money there too. I don't know. America's pulled through a lot of stuff. I can't see any one politician taking that away. If we stop seeing Amazon trucks on the street, I'll get worried. Until then, I'm not worried.
Yeah, I was talking to my buddy. He drives semis, right? And he's saying, hey, watch out, because he's saying the jobs have gone down dramatically, and he's going to the boards, looking at the boards, and there's very little work, and a lot of times the bids will be so low that it's just sitting there, like no one's willing to take it, and they'll drive home with an empty truck because they don't want to take it. And he says in the trucking industry, they're starting to see a huge decline.
I wonder what that's all about. I don't know a thing about the trucking industry. Does he have any idea why?
Right. I mean, he has several ideas. Part of it, he says, is the economy is just not as strong as everybody's saying it is. That the numbers are inflated. We see the numbers are inflated, right? When they come up with the jobs report, and then they turn around and they reduce it, and they reduce it again, right? What is it, like they reduce it 1 or 2 months afterwards, and the job report gets reduced again, and within a couple months, and then a year later they come back and they reduce it. Like I think recently they reduced it by $800,000 jobs from the year prior, and that's already having reduced it previously.
Yeah, difficult to know about things you hear in the media, how they're spun and what the truth is. It's always a challenge. I just, for me in this industry, optimism is the rule, and it's not in a dangerous way. It's like, as long as you're investing in companies that have a solid balance sheet, which is audited, which we can count on, those specific sectors or parts of the economy, we anticipate things coming together somehow, without knowing how, but they just always seem to.
And those equities, that's kind of a little bit of a risk, and you can go into the bond market, maybe have a little bit more secure investment, and then I guess commodities, right?
For sure, yeah. All of the above are going to be covered in a good diversified portfolio, and depending on the time horizon, we're going to lead more towards equities if we've got more time, and if we're looking at a shorter time, bonds are going to be more predictable. The movements are always foreseeable, with bond portfolios. I shouldn't say always, but they're most often you can kind of predict, well, rates are going to go down, so your bond prices are going to go up and your yields are going to go down. It's just that's real basic stuff. So when we need that predictability, we definitely lean more on fixed income bonds and stuff like that.
And commodities are interesting because you look at commodities and try to wonder, how can I, as just a retail investor, get involved in these commodities? And two of them really that are kind of drawing my attention are oil and gold.
Sure. Because
if you look at, other than with COVID, when oil went in the negative, right? They were basically paying people to take oil. Oil has never been so cheap when compared to gold.
That's an interesting comparison that I've never thought about. But it's interesting to see there was such a push for EVs, and now the tax credits are expiring. It's less attractive to buy an EV, and so I think oil is going to stay in fashion as the number one fuel source for the foreseeable future. You can't make an electric semi. I mean, no one's.
They're just too expensive,
and they're
right?
too heavy. The richest can't hold them.
Yeah.
So oil's gonna be around, and yeah, I mean, both limited commodities, right? We're gonna run out of gold. We're gonna run out of oil at some point. So those things have to have value based on just the nature of the limited supply.
So let's talk a little bit about gold and then get back into oil, because until the early 70s, the United States was tied the dollar to the price of gold, and then you have this huge shift, and now at this point a lot of people are talking about the inflation, and that's why we're going to see a big rise in gold, or maybe why we've seen a 30% increase in gold this year.
The last round of inflation, pretty clear cause, right? COVID came, they had to put this money in the economy, and maybe they went too far with it. Who's to say? I wouldn't have wanted to be the guy choosing when to turn the supply of money off. That's a tough call. So maybe they put too much money in the economy, and then we had inflation. But the moment that COVID was, they accepted, what it was going to be, that it was going to shut the country down. This is so predictable. Like, there's no way you can inject this much money into the economy and not have this inflation. And because we didn't foresee COVID, but there's no reason to expect stimulus to that level. There's no reason to expect government injection of cash into the economy in the near future. Inflation should be okay. There's talk about tariffs causing inflation. Well, if they're not going to go to that extent, it's a great political football to throw around and say, well, if there's too many tariffs, we're going to have more inflation. Well, they won't.
But was it Ferris Bueller, right? Ferris Bueller's at the beginning of the class, at the beginning of the movie. Do you remember that movie? And the teacher asked the question, and he asked the question about some new legislation that was or some old legislation in the United States back in the 1920s and 30s. And I think the economists kind of tie the issues that caused the crash in the late 1920s into the Great Depression to tariffs.
Oh, it's simple math. You can't raise the cost of something without pushing it down to the consumer. There's no way around it.
Right.
But right now I think that the talk of tariff is more about just earning votes, and when the math of it all settles on the table, it's gonna be like, okay, that's not gonna work. We're not gonna do that. It's those things aren't gonna happen.
But what about tariffs in the essence of just trade war, right? We've got the United States, of course, like our manufacturing is nowhere where it used to be. Who knows if it'll ever
expensive.
Be able to. Yeah, it's super expensive. But then you look at China, it's just this huge manufacturing machine. And so how can we really compete with them with the manufacturing unless we go to tariffs?
Right. It's either tariffs or stimulus into our manufacturing sector. I don't know, and that's something. That's why I'm not running for president. But because inflation has been such an enormous topic, it's going to be something that is going to be watched so closely. They're not going to make any extreme moves that are going to cause us to go above 3-4%. Again, that only happened because it had to, because of COVID. In my opinion, I think we're gonna tread so lightly in that area.
So you're the position that kind of the Feds took on early back in 21, 22, where they're saying, no, this inflation is transitory. It's transitory.
For sure, yeah. I think the symptom. It's a symptom of a very clear cause. You give everybody a bunch of money to spend. Well, then supply goes down, demand goes. It's just, it's real basic. And to blame one political party or the other is silly, because it was, part of it was in one presidential, and the other one was the other. So I don't see it as being anyone's fault. It was a necessary evil so that our country didn't shut down. And I actually think they did a pretty great job, but not perfect. But who could be perfect? We didn't know how big it was going to be. But look at us now. We're okay.
Yeah, I get to the point, like, it doesn't matter the political party that you're from. People don't like it when I say it, but I think Trump was the most socialist president we've ever had, right? Wow. Just printing money, saying, here, you get a check, you get a check, you get a check, right? Giving money to everybody, right? And Republicans hate to hear that, but that's the truth.
Yeah, I got a lot of checks from Trump, for sure.
Yeah.
That's and that's why I won't point a finger at either direction. Maybe Biden kept the stimulus going too long. I think that's the biggest complaint. And everyone says, well, the inflation was low during Trump. Well, that's because it didn't hit, because his stimulus hadn't really gotten into the economy yet. So that without another black swan event like COVID, we have the tools to control inflation. I'm not afraid of it. They'll tread lightly. They'll tiptoe in with the tariffs and whether they do that or manufacturing stimulus. The results are always, predictable, so they can do it in such a way that we keep it low.
Yeah, and so their goal is 2%. It's over 2% still, and so but they're willing to come in and to reduce interest rates.
Yeah, again, above my pay grade making that decision. From where I sit, I just say, okay, you're going to raise rates. I'm sorry, lower rates, I know what to do. Based on that information, we know how to shift a portfolio take advantage of it. So, maybe it was too soon. Who knows?
So as interest rates continue to decline, moving that stuff into equities, which are going to be more risky.
For sure.
Where else do you move the money as the interest rates start to come down?
Theory would say small cap equities are gonna be the biggest benefactors of lowering rates, because you think about a small company, they need to borrow money to grow, and so they're the ones where you'll really see, historically, that's where you'll see some big growth. But I don't lean too heavily anywhere. It's just maybe a few percent here or there shift towards small cap, towards equities, but we'll keep an eye on things, and I don't predict the future too specifically, but these things like rate shifts are they have historical patterns that we can count on repeating.
So those are decisions that you've been made. Yeah, one more time. All right. Those are decisions that you're making based on historical data, right? Looking at what's happened with the markets as interest rates have fluctuated.
Correct. Yeah. Yeah, I'm not reinventing the wheel, and I'm not trying to outsmart anybody. It's kind of like, round hole, round peg kind of a thing. Okay, we know what to do here.
But when will the system break, right? I mean, because history says the system's going to break. It's not going to last forever. And so what are some of those flags that we look for to say, okay, they have, if we look across human history, empires have fallen, right? And so what are some of those red flags that you look for as a financial advisor, letting you know, okay, like these are some signs? Because a lot of people are saying like it's the printing of the money. Like we're devaluing our dollar. Coming off the gold standard back in the 70s was a huge flag, and now we start to look at the inflation just to continue to go up, or not necessarily inflation, but the value of the dollar just coming down.
Yeah, and again, I go back to I don't know what the evolution is going to look like. That's going to get us out of the hole we've dug. I mean, our deficit is enormous. And it's been growing since we've been a country. So, great question, and I wish I had an answer, but I guess I have confidence that there will be an answer. Geopolitically, our country is the best on the planet, and that's just based on the access to water and access to trade and all these other things that kind of give us an advantage.
Those access to commodities.
Right, and trade, and so if we can... we just have to evolve to take advantage of that stuff. If our country doesn't always come out on top, somebody really fumbled, just based on the shape and the location of the dirt we're sitting on the globe. And there's that's kind of down a other rabbit hole, but
So let me ask you that question with regards to, here in the United States, like we're relatively protected, right, from other world powers, depending on how, I guess traditionally, right, but now with the potential of, what do they call them, the IDFs, and China's testing those out, and so, like, how do you as a financial advisor then look around the world and say, okay, we're starting to see all these hot spots start to go off?
When I have this conversation with clients and they say, what if, and it's, let's just say something there's some huge disaster. I guess at that point we have bigger problems. Like I'm definitely not in a position to protect someone's assets if there's a huge war or a zombie apocalypse. Like if those things occur, we have more important things to worry about at that point. We can use the tools that we've got with our economy, with stocks and bonds and insurance products, as best as we can. But if something bigger than us happens, it's kind of, we can't build a product to withstand that, other than possibly gold, and actually owning the bullion,
actual piece,
which is kind of fun. I mean, it's a great thing to collect that actually almost always gains value, especially in 2024.
Is it just gold, maybe silver, copper? Because I imagine, right, a gold ounce, right? What is it, $2,700
Yeah,
right now?
$2,700, yeah.
Like, how are you going to break that down? Like, if it gets to that point where people are trading food for gold, I mean, you've got to then divide that piece of gold up, right?
Yeah, because an ounce of gold is pretty small. It's pretty dense stuff. That's interesting. Yeah, I mean, all those precious metals, they're limited quantity, so they have to have value as long as we continue to utilize them for, actual goods and services. I can't see any harm in owning actual metals. I don't necessarily, I don't utilize them within the actual metal, I don't
The actual metal, having that at home.
But I definitely tell people, like, hey, if you want something else to spend your money on, people ask me about crypto a lot, and I really don't have an opinion about that because it's so mysterious and so insecure, or unsecure. But with gold, I think it's got enough history and enough understanding that it's, hey, you want to dabble with something, go on the internet and order some coins or some fun bullion that you like. You'll never regret it.
Yeah, I was listening to Peter Schiff with my 12-year-old,
Mm-hmm.
and my 12-year-old was totally in, right? He's like, oh my gosh, we're gonna have to start buying our bread with gold, and so he's saying, I think we should do that. We should just go buy a bunch of gold, right? And it wasn't attractive to a 12-year-old. It was definitely, inciting to him. But what you're saying is, no, we have systems in place within the United States. Like, we don't need to jump to that level.
I hope not. I'm not prepared for that, and I don't think we need to be. That's something I hate to be wrong about. So if and like I said, I had a client a couple years ago who she was so scared. She said, Paul, I just have to take my money and I just have to buy gold. I can't take this. I don't know if, and Amazon's always my example. So I don't know if Amazon's going to be there tomorrow. I just don't feel like it will be. And if you feel that way, then yeah, I'm probably not the guy to work with you because I don't share that attitude. So people who do have those fears, yeah, by all means, go out and get the gold. I don't think it's the best way to, I suspect if you're 20 years from retirement, you're going to wish you had done something different. But I can't guarantee that. So.
And you have enough confidence in the system. There's nothing really flagging your attention saying, hey, things are starting to go south. It's just the system's working. And so continue to trust in it. Continue to invest in those that have proven successful over the years.
Absolutely. I mean, this country's got some great minds, and they evolve to solve these problems. I think some things are probably pushing into the gray area of where I wouldn't like to see it get this bad, but there's problem solvers, and yeah, I'm confident that that's where my money is. That's what my belief is. So when I put my clients in the same boat that I'm on. So if they go down, I go down. It's what I believe in. So it's not like I got a basement full of gold and I'm telling them, yeah, go get the stocks because I get the commission. That's not the deal.
Yeah, and I want to go back a little bit towards the zombie apocalypse if I can, just a little bit, because there's just stuff that's happened in my lifetime that I've never seen before. Right, 2 attempts of assassination on our president. People who you wouldn't even imagine talking about a potential civil war within the United States, addressing that and addressing the potential of that, the likelihood of that happening within the next 5 to 10 years, or people in political power throwing around that word, right? Saying, oh, we're involved in like a peaceful civil war unless the other side wants to provoke it, right? Turn it violent. And so that's kind of a red flag to me, saying, okay, what is going on? Like, why are people even mentioning this?
Yeah. With social media and all the information and the misinformation so readily available, it's easy to fall down those rabbit holes and get scared. And I can't lie. There's I think about it too, and I get a little nervous. I'm not going to prepare for something that I feel is pretty unlikely. I mean, there's bottles of water at my house. There's if the power goes out, we'll be ready for a couple weeks. But beyond that, I don't. I try not to let that stuff take over my day, because what can we really do if there's a civil war? I mean, some people are stocking up on ammo and stuff like that, and maybe they'll be the smart ones someday. Hopefully, I got a friend who did. So,
yeah,
because I'm not,
yeah.
And I don't think it's necessary. But maybe I'm wrong. I can't be sure about. Mm-hmm. It's true. So.
Yeah, and it's, of course, is exciting, right? And then going back to your point, like, this misinformation online, and that's something that really questions me about the misinformation online, the information that we're receiving, because you have just recently Facebook came out and said, hey, we were pressured to hide this story about Joe Biden's laptop back in 2020 when we turned out that there was issues with that laptop.
Right.
And so is there really misinformation that we're getting online?
Yeah, that's another rabbit hole that depending on, do you go to Twitter, do you go to Facebook, do you go to CNN, do you go to Fox News? There's so many different sources out there that the truth is somewhere in the middle, because they get more clicks when they get under your skin. So I think Facebook's a business that's designed to engage you, and the more they make you mad, the more they engage you. So they know what they're doing. So I'm human, so of course I get sucked in sometimes, but I do know better than to. You just can't buy it hook, line, and sinker. You just can't. And I think they almost try to make it's almost like you gotta shrink it down to your level, like our world. I'm going to make sure I'm respectful to Isaiah Jerez because you're in the room with me. So I'm not going to worry about if someone on the other side of the world has said this or did that or did that. I can't control it. I can't change it. So I'm going to just, for me, shrink it down to where we can control it, which is, love your neighbor, right?
And I think that's a huge point, right? That you're getting to is, hey, like, who am I going to trust? Who am I going to look towards? And when you're looking for a financial advisor, whether or not you're looking for an attorney, right? Whether or not you're looking for a mechanic, like, you can go to these huge entities and look there and say, okay, I can go to this big bank and they're going to have my money. They're going to look out for my money. Or I can go to Paul, right? And Paul's right next door. I go ride bikes with him, right? Our
Yes. daughters
are the same age. And so it's like, who are you going to trust? And you're going to want to be able to trust someone that's going to look you in your face and tell you, like, this is what I see.
And that's, some people have, some people love to go to the big entity and say that they're too big to fail or something like that. But you do get, you get kind of lost in the mix sometimes with them. And I'm sure it's the same with you. I can call the guy in the billboard, and I don't. Do you ever even meet the guy in the billboard if you call the guy in the billboard?
I don't know. I've never called a guy on the billboard. I've met some of those guys that are on the billboard, right? And it's a business model, right? Some of them are really good attorneys.
Sure.
Without a doubt.
But
yeah.
I wonder if you ever get to deal with them, or if you just you're dealing with their people who may or may not be at the same level. So.
Yeah, and even on the reverse side, right? Like the big billboard, the big firm, right? That's attractive to talent, right? So I'm always looking for talent to be involved, and they get kind of persuaded by the big billboard, right, and the big lifestyle, and so even in a talent acquisition. But yeah, having someone to work with that you trust, that getting back to that misinformation and being able to rely on what Paul says.
And I'll always give you as much as I can, and of course I am limited by what I have access to. Hopefully I have more. In the financial markets, there's a lot more honesty, a lot more transparency, because things do get audited, so it's not like politics where people are saying this or that. They can't. We can't. We get in trouble. We get fact checked, and they're real fact checks. It's not just like, well, I heard. No, it's they did the math. It just doesn't make sense. So. And
I hope you're true, because I'm pretty skeptical about this, and I think going back to the employment numbers, which probably shouldn't be pretty hard, because they should. Like, that's your job. Your job is to determine what the employment rise was, and you're basing this on the employment taxes that have been coming in. So get it right. Like, why does it take you a year to revise it? And
that is really frustrating.
And I think a lot of it is politics, right? Again, it doesn't matter who you are, Republican or Democrat. They're both fudging the numbers for whatever reason.
This is why I love my industry. So those things, rumors of employment, things like that, they get priced into the market, and so the market's going to react in a short term because of this rumor, this incorrect information. And then when the updated information comes out, it's going to react again. And then when the truth comes out, it's going to react again. But at the end of the day, that might be a year period we're talking about. And we might have had some hiccups in the middle, but things continue to go on an upward trend because ultimately our country continues to grow and evolve and find ways to solve these short-term problems. And so, politics, they want those votes right now. next month. And so we're looking at a 10-year time horizon or a 5-year, whatever it may be, and we have confidence that in that time, all these rumors and this gossip and this social media nonsense, it's going to get washed out, and the truth rises to the top in the market. It's efficient, it's accurate, and there's integrity in the market to a large degree, and I love that about that. And sometimes it means I'm wrong. Sometimes it means I'm wrong beyond a doubt, and I'd prefer that to working in a gray area where rumors are good. Let's go with that. So,
yeah, and getting back to your point, like, okay, we can trust the system, and one of the things that I rely on is we've got a large country with a lot of commodities that we have access to that we haven't even tapped into yet, right? And that's one thing that a hitchhiker reminded me once, like, hey, like, we have so much water that we don't even access, right? I know it's a big thing in the West, right? We don't have this water, but there's water, there's solutions that other countries have implemented that we don't even explore. And it's just a matter of just having the faith in the system.
And you just have to think that when it becomes, this is a capitalist thing to say, and which is okay with me, when it becomes cost effective to utilize those methods, they absolutely will. It's just a matter of, well, we don't need to yet, but as soon as it's profitable, we'll do it. I remember after the Twin Towers went down, it was horrible, right? But there was this interesting thing where everyone wanted to buy a flag, and all of a sudden everyone was selling flags, and it's like, we'll always find a way to make money. Everyone wanted a flag. When everyone needs water and we can't find it, someone will find a way because there'll be profit, and that's where capitalism can be a great, part of a system. And yeah.
I mean, it's important to have faith in the system, right? As an attorney, I've taken an oath, right, to uphold the Constitution, not only of the United States, but also of the state of Nevada, the state of Utah, where I'm licensed as well. And it's having the faith in that system that, hey, like, we have an agreement that we can all work together and come out on top, right? We can all have a brighter future for not only ourselves, but for our children as well, right? And there is a lot of skepticism in a lot of people and looking towards those doomsdayers because it's clickbait, or maybe there's actually some good rationale in it. But how do we stay positive, right? What are we looking for in the future? And what are some signs to say, hey, look, stay positive. Like, here's some brightness amongst all this darkness, right? All this strife.
You just got to look at how far we've come, right? I mean, you can take it at an individual level. I mean, who were you? Geez, let's go back to this. I don't know the first time we rode bikes together, but I know where we were, and I know I beat you to the top of Nelson Landing Hill by about 10 seconds, and then never beat you again. And like, who you were then, a struggling attorney working for a firm, and now look at you. Like, you've made so much progress as an individual, and if you look at the country and what we've been through, we continue to find our way out of things. And in my industry, regardless of what's happening, regardless of who gets elected, there's always a shift, a pivot that we can make to find a solution. Like, you can either choose to look down or look up. I really think it's just a matter of a choice. And when you make the choice to look up, you will find a solution. And that's from, our relationship to political relationships that applies to everything, in my opinion. I don't think social media is not helping, so we have to. It's up to us to.
And financially, like, optimism, like, where do you put that money?
Yeah, and again,
not everything in gold.
No, it's a great asset class, yeah. And I bet I was more skeptical. I did not predict 2024. I got to be honest, but for the people who we had a few percent in there, but not enough. But I wouldn't change it because we don't make predictions like that. So regardless of what happens, we're going to have exposure to something that's working, and there's always something working. You just got to lean on it and
be able to be flexible with your investments.
See, having access to the information, knowing which way things are likely to go and which tools can be used regardless of that situation, that's kind of where having someone like me in your corner can earn you the couple extra percent. I mean, this could be a change in lifestyle in retirement, right? Maybe the joke is living on ramen noodles or taking cruises. What's it going to be? And a few percent difference, which can be made by knowing which tools to use in a different market scenario, that can make the difference. So that's what makes me passionate about my business, and that's what I want people to wake up on their 65th birthday, man, I'm glad I met Paul, because this is how we're going to live instead of how we would have lived if we hadn't. So, yeah, there's no reason to, in my opinion, I don't think we need to worry about anything.
And I'm going to use your moniker because I think it's great. So where can we find you, Redbeard?
Redbeardfinancial.com.
And what about your socials?
Yeah, you find me on LinkedIn, find me on Facebook, all under Redbeard Financial. And yeah.
TikTok yet?
We're not allowed to go on TikTok. But yeah, right there in Boulder City. So I'm local. You get to meet me, you get to shake my hand, and I get to learn what you need and help you, make those goals come true. So.
Hey, thanks for watching. If you like this video, make sure you like, comment, and subscribe for more.